What's up, guys? Welcome back to DCA. Today, what we're going to do is take a look at on-chain metrics for Bitcoin. We're going to look at the number of addresses holding greater than zero point 0.1 Bitcoin. And we're going to compare that to the number of addresses on the Bitcoin network holding greater than 10 Bitcoin. You can think of, the white line, which is the wallets holding greater than 10 Bitcoin, not necessarily as being whales, but certainly you could consider them high net worth investors. Comparing that to, your average retail investor, which is probably going to fall in the zero point 0.1 up to, let's say, 10 Bitcoin. All right. So we're going to look at these two because we want to identify, are there differences in the way that they value Bitcoin during the course of a market cycle? The white line demonstrates the number of addresses holding greater than 10 Bitcoin. Okay. The orange line, on the other hand, is the number of addresses holding greater than zero point 0.1 Bitcoin. And then the blue line here is the price of Bitcoin over time. So we're going to start by looking at the 2017 market cycle. And we're going to see how these two demographics reacted differently. And, the whole point of this is to decide, are there particular traits that the high net worth investors are demonstrating that you could implement into your own approach towards the cryptocurrency asset class? All right. Notice that basically we're, starting in 2016. Both demographics at this time are acquiring Bitcoin. They're acquiring Bitcoin. They're acquiring all the way up until about March. All right. So you see the number of addresses holding greater than 10 goes up from, in basically a short amount of time, from the end of 2016 to March of 2017. It goes from approximately 140,000 all the way up to about 150,000. All right. Then the high net worth investors. So Bitcoin at this time is around $1,300. And the high net worth investors stop acquiring. So basically what that's saying is they have been acquiring during, and if we just go back some, we can see, so they're acquiring during the bear market. And in this case, you can see, so are the wallets with zero point 0.1 or greater. They're acquiring as well. But notice we see a clear trend occur here. The high net worth wallets stop acquiring right about here. Okay. So this is March of 2017. If you recall back to March of 2017, or if you look at a historical chart, you'll notice something. In March of 2017, interestingly, that's when we got back to our prior all-time high. So the high net worth investors were willing to acquire large quantities of Bitcoin until it got to the prior all-time high. And then what did they do? They started selling, right? They started selling some of their stacks, taking the profits that they acquired during the bear market. Okay, so they acquired at $200, they're acquiring at $160, they're buying at $700. And then as soon as we get back to our prior all-time high, then they start taking some profits. All right. When the high net worth wallets start to take profits, the lower value wallets continue to acquire. From that point, the high net worth wallets have started to trail off. People are slowly, you'll notice that it starts trending down actually. They're slowly selling their stacks that they've been acquiring during the bear market, which is what we always recommend on this channel. Dollar cost averaging your way into the market, dollar cost averaging your way out of the market. And that's exactly what you're seeing here. But the key is they are selling their stacks through this portion of the market, dollar cost averaging their way out, while the smaller value wallets begin to acquire. All right. Then the market begins to go parabolic. All right. And then, there's an element of FOMO that kicks in. People are like, oh no, I started selling at $1,300. Now Bitcoin's at $5,000. Then it's, so you can see this number while there's diligence, people dollar cost averaging their way out. Now people are getting into the FOMO phase. All right. And here is your number of wallets holding greater than zero point 0.1. You notice that as the FOMO phase of the market cycle kicks in, so, this is when the price goes from about $3,000 all the way up to $20,000. These high net worth wallets or greater than 10 Bitcoin wallets are acquiring. They begin acquiring in September. All right. So they begin acquiring yet again at around $4,000. The price starts to go up. And then you'll notice once it gets up to around $7,000, they begin to sell. All right. The number of wallets begins to drop off. It spikes up in one last FOMO phase. And this is the critical part right here. Notice the number of wallets holding at least 10 Bitcoin right here at the end of November. It begins to dramatically decrease. Now, I want you to notice a key difference. The wallets holding greater than 0.1 Bitcoin. So these are many times going to be people new to the crypto market who don't know any better. They are acquiring rapidly straight through the market cycle peak. They continue acquiring. These lower value wallets are acquiring while the higher value wallets, how are they making their profits? They're selling to these guys. They're selling to these guys as the parabolic phase is occurring. They're selling their stacks to these lower value wallets. Okay. The price goes from 20,000, it rapidly drops down to 6,000, sort of goes sideways from February of 2018 all the way out until November of 2018 before there's this massive capitulation event. It's not a bad idea to be acquiring, during a bear market, but oftentimes when you're in a full-fledged bear market, there will be a large capitulation event, which acts as a way to kickstart the market cycle. You rarely see these bear markets like this just go, slow down and then slow up. It usually goes something like slow down and then a rapid drop in price, which is what we saw. Okay. So we have this long-winded, approximately 1 year long consolidation phase, followed by a massive capitulation. And then, the high value wallets, they begin to start acquiring. We go from decreasing number of wallets to increasing. So right about here, almost near the bottom. So $3,900 is where they start acquiring. They start acquiring basically at this support level prior to the location where they started acquiring before. All right. So if you look, this is where this level right here is where these high value wallets began acquiring, during the bull run. So they're going to wait until it reaches that price point that it was at in the bull run, about a year and a half earlier. Okay, so then we come to the current market cycle, 2020. You know, these higher value wallets have been accumulating Bitcoin, most heavily starting at around $3,500 to $3,900. Both wallets are continuing to accumulate Bitcoin, basically from the COVID capitulation event all the way through November. Now, critically, if you recall, what happened in November? In November, we got to our prior all-time high price. So the second we get to our prior all-time high, right here to right here, you see this number of wallets begin to plummet. And why is it plummeting? Well, they're dollar cost averaging their way out of the market. The lower value wallets are acquiring, and even more rapidly acquiring as the bull market is basically progressing. But notice what the high value wallets are doing. So these greater than 10 Bitcoin wallets are now dumping their Bitcoin. And where are they dumping it? Exactly where they dumped it the first time. They begin dumping it when you get to your prior all-time high. So right when we're at around $20,000, they begin dumping their stacks. You see this number just plummet off the cliff. And in fact, you see it in a way that we've basically never seen before. So this white chart, you see right when we get to our prior all-time high, if we just, come straight across, the number of wallets holding 10 Bitcoin or greater plummets, and they sell their profits because they've been dollar cost averaging through this phase of the market cycle. They've been dollar cost averaging into the market. And as we get back to this level, then in mass, they start selling their stacks. So they're selling their stacks starting right here. And who are they selling it to? Notice the white line's going down. The red line is significantly increasing. So they're selling it to these guys. In a nutshell, that's what we're saying here. So in the setting of a bear market, the high value wallets are waiting to sort of acquire at key price levels. And in both instances, the high net worth wallets got out of the market prior to, or began getting out of the market prior to the market cycle peak. And in both instances, the lower value wallets significantly increased in number even through the end of the market cycle peak. All right. So this number of wallets maxed out sort of right here at around $15,000. And these guys were many people acquiring all the way through basically right here at $20,000. And we saw the same thing happen right here. Where did the peak occur for this market cycle? Well, it's actually occurring right now. We're actually at a new peak, but prior to May. So prior to the price dropping off in May, the peak occurred right about here. Okay. It occurred right about here at around $56,000. All right. So what we're saying is the high value wallets are acquiring at particular key price points. They begin dollar cost averaging in the setting of bear markets. Whereas these lower value wallets are acquiring basically through basically through both the bear and the bull market they're acquiring, but then you see these drop off rapidly because they panic sell. The second there's a giant drop in price, they panic sell, which is what we saw here. Whereas, like we said, just to reiterate, these high value wallets are dumping their stacks when the prices reach these basically massively speculative prices. You can just see the divergence. As this decreases, this is increasing. All right. So in the setting of a bear market, they somewhat resemble one another, but in the setting of a bull market, they diverge. The high value wallets are going to sell their stacks, and this difference in slope that occurs at the end of a bull market is these wallets selling to these people. So the moral of the story is when we're in the setting of these bull markets, so if it comes again, you want to be the guy who has already acquired his Bitcoin or even your altcoin. You want to have acquired it prior to these parabolic runs. So you want to think like a high net worth investor. The high net worth investor is not acquiring at the end or even in the middle of a bull market. They are selling to you. So if you're the guy buying in the middle of a bull run, you're this guy. And what do you want to do? You want to start thinking like this guy. So selling in November, begin dollar cost averaging out of the market in November. All right. So that's the whole point of this today, guys. That's basically all I wanted to show you. I wanted to show you the differences between the ways that high net worth investors are approaching the market compared to the ways that smaller net worth investors are approaching the market. These guys are chasing multiple hundreds of percent gains over time, whereas these guys are chasing multiple 100% gains in a short amount of time. The difference is this is a strategy that works. This is a strategy that gets you wrecked. All right. So when you hear people on YouTube in the setting of a raging bull market saying buy the dip, Sure, it may work, from time to time, but at the end of the day, they're encouraging you to act like the dumb money instead of acting like the smart money. So if you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.